now?
Well, it must be the Hong Kong Economic Policy Green Paper 2025, which was just published last week.
Perfect answer. The Green Paper was prepared by HKU faculty members, researchers, and other internationally renowned scholars who have conducted in-depth policy analysis and proposed recommendations for various pressing issues in Hong Kong. There are only limited hard copies, and I encourage you to take one and dive into its contents, as it provides valuable insights and proposed solutions for the future of our city. You can also share its online version with your colleagues and friends.
Now, let's move on to our next inspiring session. Today, we will be delving into a topic that has captivated public attention: entering sustainable investment in an unsustainable world. Now, let's invite our moderator, Professor Guojun, Professor in Economics, Management and Strategy of HKU Business School, and Director of the HKU Jockey Club Enterprise Sustainability Global Research Center, and our panelists to come on stage. They are Mr. Ted Chen, Head of Hong Kong, Senior Partner and Managing Director of Boston Consulting Group; Dr. Ma Chaode, Assistant Resident Representative of United Nations Development Program in China; and Mr. Ken Wong, Partner and Head of Asia Pacific, Infrastructure of EQT Partners. Let's take a group photo first. Thank you. Please take your seat on stage.
Ladies and gentlemen, and distinguished guests, so welcome back after a nice lunch. So for this session, the title is Anchoring Sustainable Investment in an Unsustainable World. I choose this title for a reason. If you look at what is happening now, Los Angeles is still in fire, with thousands of houses burned down in the past few days. Global temperature just rise about 1.5 degrees in 2024, the most recent data. And that's already kind of make it really difficult for us to reverse this trend. Meanwhile, we see rising tensions across countries, persistent regional conflicts, and also importantly, growing protectionism, trade tensions, geopolitics that we have mentioned in this morning's sessions. So under this, I think, very challenging time, we have to admit we are actually living in an unsustainable world if we allow this trend to continue. With those unprecedented challenges, I think we face and also have great responsibility to think about the questions, in particular from business sector, how we should navigate those challenges. We also see, in particular related to economics and finance, there's a growing trends of anti-ESG movements, and many countries are considering to imposing green tariffs, tariffs on green products. Sectors like PV industry and many EV car manufacturers are struggling in making profits, right? So with those challenges, I think we are very honored to have this opportunity to gather sets of experts who are going to share with us very diverse perspective. We have representative from UNDP, who is going to share with us kind of a global perspective, policymakers' perspective, and about how things are evolving now. We also have investors from EQT, who is going to share with us their strategies, what they think about investment in sustainability, and how they navigate those politically challenging times, allocating assets across continents, countries. We also have expert strategists from a leading consulting group. Later, when I ask the question, I will give a brief introduction to each of the speakers, who is going to share with us from corporates, from practitioners' perspective, what are the main challenges they're facing and how they deal with it. Now, this is a very short opening remark. Let's welcome our guests, and hopefully they are going to share with us their most recent thoughts on those critical issues, and welcome to join this session. Okay, I want to get started from inviting Dr. Ma Chaode, who is Assistant Resident Representative of UNDP China. He actually oversees international programs with more than $20 million US budget each year by working with 10 different ministries in China, and also most of the Chinese provinces in promoting SDGs sustainability. So I really want to start from Dr. Ma, and I would like to hear from you, standing from a kind of UN's or global perspective, do you think our investment in sustainability is actually being held back or pulling back, or now still continue to grow? And if we want to push it forward, what do you think are the regions and the sectors and or kind of specific issues that you think are most urgent for industry and for financial institutions to work on to? Thank you.
Okay, thank you, Professor He. It's really my great honor to be invited here for this very important session, focused on global and also domestic and even regional issues. So I really agree with Professor He's comments in his remarks in the very beginning. So nowadays, we are really facing uncertainty globally. For example, the climate change issue is really the hot topic now. And in the past decade, we really faced the hottest 10 years in the history recorded. Especially 2024 is the hottest in the history. So every corner of the world faces the same climate change threats. So it's a threat to the world, threat to China, and also to Hong Kong. Secondly, biodiversity losses is the key issue nowadays. According to the report released by APBES in 2019, May in France, so around 1 million species facing threat globally. And most of them are happened in the recent decades. So as you know, biodiversity is related to everybody's life, in our daily life, whether our food, whether our clothes, whether our transportation, all things relate to biodiversity. Without biodiversity, nobody can live. As the Secretary General mentioned, so without biodiversity, we have nothing. Without biodiversity, we are nothing. So how to deal with the biodiversity conservation, sustainable use, and also access for benefit sharing is really the common topic in nowadays. Thirdly, the global economic growth is decreasing. And so how to deal with this issue? So we really need the innovation, really need the collaboration and the joint efforts to work with each other to make sure our sustainability in every corner of the world. And also the population is also decreasing. So how to deal with this issue? So I think we really need the joint efforts to change the trend to make sure that the human population is sustained. So this is my understanding about the global threats. So these threats also similar in China. So as everybody know, the economic growth in China also is also decreasing. So not as we expected in the past. And also the climate change also a threat to our social and economic growth, and even to the environment. And also the population growth is also decreasing. So this kind of common issue is really is really threats to the world. So, but how to deal with this issue? We really need the joint innovation, joint efforts. But we should also think about the good perspective of the world globally. So, for example, in China, even the economic growth is slow, but we have so many ideas, so many innovations to promote the green economy in China, and also the standard, the practice, the tools, so we can use this opportunity to promote the green finance, so and also innovations. And for the ecological conservation, whether it's biodiversity conservation and also the ecosystem conservation, so the eco-civilization is really become the common practices and also common concept in China. So in this perspective, I think especially the renewable energy, so China already promote a lot of efforts from the research, from the marketing development, and lots of efforts already there. So that's the hope of the world. So I think we are very, very glad that we have so many platforms to work with each other for innovation, for share the knowledge, so we can make the world different. Thank you.
Yes, thank you very much. May I just follow up on a very short question? So we know that UN has this SDGs, right? Sustainable Development Goals. I just wonder whether you have some recent assessments about how we perform, right? So across the different countries, where are we, right? So are we able to achieve those goals, or I will let you to share with us.
Okay, thank you, Professor He. It's a really good question. So according to the SDG assessment report released in 2024, so in the 17 SDG goals, so only 17% of the goals has been reached the goal up to now, and half of them make limited progress or just in the middle way to reach the objective. And 1/3 of the goal already behind the target, even backward. So it's really a challenge to achieve the 17 goals by 2030 if we keep the business as usual. So how to make things happen? So as I mentioned, we really need the joint efforts from different countries, different continents, for innovation, for big investment, from a sustainable perspective to make things happen. Thank you.
Yeah, thank you, Dr. Ma. And I would like to now switch to EQT. We have Mr. Ken Wong, who is the partner and head of Asian Pacific for infrastructure at EQT Group. And EQT Group, as we know, oversees more than 250 million euro assets across 48 funds in many countries. And it's also leading kind of asset management corporation that invests heavily in sustainability. So I would like to ask, from your perspective, you can think it's really like you have the money, right? You are diverting practices. You are trying to tell people what we should do, what we should invest. And how do you, right now, how do you perceive the changes in the kind of global scope? And also, how do you see financial institutions like you allocating assets across different dimensions, domains? Can you share a bit with us your strategies?
Yeah, absolutely, Professor He. It's 250 billion.
Yeah. Oh, sorry, 250 billion. Of course.
We're at EQT. We're asset managers. So we manage. It's not our money. We're managing money on behalf of sovereign wealth funds, investors, pension funds, all across the world. And it's a really good question that you've asked. I think there's a couple points before I kind of dive into that that I think is at least in my mind fact. I think you're absolutely correct in that the world is much more uncertain from a broad range of factors, geopolitical, ESG. There's increased risk in some of these trends that we're seeing. You're seeing what we internally talk about is deglobalization. So, you know, in the 80s, 90s, you're talking about globalization. What we're seeing is a nationalization of supply chains, a nationalization of policies, you know, country first rather than globalization. Those are definitely factors that we are seeing. And we're also seeing, you know, economic uncertainty across the board. I know there was some discussion earlier about the economic situation here in Hong Kong. When I talk to my global colleagues, that's fairly commonplace. My colleagues in Europe don't think that Europe's doing quite well. Maybe my US colleagues think a little bit more optimistically right now, post the election. There are a variety of colleagues in Asia Pacific who have varying degrees. But overall, I would say economic uncertainty is probably higher than it's been since COVID. And even before then, probably in the last decade, it's probably at the highest it's been. So there is a range of uncertainties, which is risk, right? The second thing is the topic of this panel is sustainability. I would say is the first thing I would say about sustainability is climate change is real. I think that's just an unequivocal fact. You just need to walk outside in summer or in winter or where you think was summer or winter, and you know that something's wrong. It wasn't like it was 20, 30 years ago, and you can have whatever debates about it that you like, it's real, right? So climate change is real. And the other thing about sustainable investing is we will run out of carbon-based energy sources at some point in time. So we can have a debate about whether investing in sustainable assets is good or bad, and which spectrum on the side of politics you sit. That is fact. There are only so many carbon molecules, and we're going to be out of them at some point in time if the rate of consumption of those energy molecules comes at some point in time. It's just fact. So I think thinking about sustainable and how do we think about that as an organization? Thinking about sustainability, I think this is where one of the things that we've probably done well, and EQT, we've been forward-leaning about sustainability. Maybe sharing a bit of background about EQT is helpful about how we think about this. We're a Swedish headquartered firm. We've been operating for 30 years. We're the largest private equity firm in Europe. Now with our merger with Barings Private Equity, with the largest, well, we will be by the end of the year, the largest private equity firm in Asia. And we're top 10 in the US, but overall globally, the third largest private equity investor. And we actually have our heritage with the Wallenberg family, and I don't know whether many people here in this room know the Wallenberg family. They're a fifth, sixth generation family who still today control 30 to 40% of the Swedish stock market capitalization. AstraZeneca, SEB, NASDAQ they have a stake in, large conglomerates. And our DNA has come from this family whose family motto is effectively not to be seen and just to do good. And that's a Swedish philosophy of business. Doing good and good business go hand in hand together. It's just a philosophical difference that the Nordics think about things. And so that really goes hand in hand in how we think about what we're investing in. And it goes back to my point around what I think people who lean towards investing in a sustainable way, what we've probably not done a very good job about is investing in sustainable products, businesses, and the like is just good business. So if I give you a really good example, when Trump announced that he was going to scrap the IRA, the Inflation Reduction Act, which is effectively a green energy bill, it was Republican senators behind the scenes which were lobbying the president not to scrap the IRA. And the reason they did that was because the number of jobs which were building solar plants were all in red states in the US. So if they scrap the IRA, as Trump has proposed to do, the economic hit to the US is going to be disproportionately impacted to red states, i.e. the Republican base. So I think the thing that we've probably done badly as firms who have leaned into sustainable investing is focus on the societal benefits. But there are also business benefits. Doing good, making money from what is an eventuality from a carbon-intensive industry is good business. The other concept that we talk about internally is that good businesses, which are sustainable businesses, whether that's generating more revenues from sustainable sources, is a value maximizing value creation toolkit. And so if I give you an analogy, we were very forward-leaning in the digital side of things very early on. We brought in the CTO of Spotify into our organization because there was a few floors up in Stockholm and brought him internally. And we enhanced our capabilities to make our companies tech leaders, cloud native, focusing on where's the next disruptive play happening in all of our companies, whether they're digital businesses or not, to add value creation or to enhance their long-term outlook. If I said to you today, if I wanted to buy a business where they were cloud native, forward-focused on digital capabilities, would a business of exactly the same except for that capability be better or worse? You would say it's better, and you'd probably pay more. That's the same lens in which we should think about sustainable businesses. If you have more sustainable revenue streams, you have a more diverse workforce which is proven to improve productivity and have economic benefits, they will be businesses that are worth more. So I think the trend, 100% agree, coming back to the point, the trend 100% agree, there's more uncertainty, there's more risk, but I'm a bit more optimistic about sustainability because at the end of the day, I think those are value creation tools as opposed to just doing good for the sake of doing good.
Yeah, thank you. As you mentioned about Trump and also IRA, I would like to follow on that because that's something seems to be a bit new to me in the sense that we generally perceive that Trump is kind of climate change denier, and he's very much wants to lower the natural gas and gasoline prices in the US, and we're against kind of development of new energy and clean energies. But meanwhile, you just mentioned that it's actually the red states who are now really benefits from IRA, which is essentially Green Bill, and also the marriage between Trump and Elon Musk. Elon Musk is doing all those renewable energy and make significant contributions. Then what do you expect is going to happen in the US about its policies regarding green industry?
It's a brave man or woman to think to be able to predict accurately what Trump will do. I think as some of the other panelists have said. I don't know what Trump is going to do. I think that's the only certainty that probably anyone can say. But what I think, at least what you're hearing from Trump, is it's about pro-business. So it goes back to my original point is we need to make sustainable investing about good economics. It's good business to invest. And that's why I think it's very hard to, and we have, my US colleagues, we have a number of platforms across the US which build renewable solar plants, wind plants, batteries, all across the world. And we've talked to the best advisors and tried to hypothesize what are the scenarios. And we've mud mapped and scenario planned a whole range of scenarios, and no one would be able to confidently to guess. I think the key thing, at least from an action item, is we just need to make sure that we are making the right arguments of why this is just doing good business.
Yeah, thank you very much. Now let's move on to industrial perspective, corporate strategist. Okay, so we have Mr. Ted Chen, who is the managing director and a senior partner, also the head of Hong Kong for Boston Consulting Group. He has been kind of advising on providing consultants to a lot of large corporations, both in Hong Kong, China, and globally. And he also emphasized about the corporate transformation, ESG development, the sustainable initiatives. I really want to hear a bit more from your perspective, how corporates or firms are dealing with the current challenges and what are the major demands, and in particular, how they're going to proceed, how are they going to navigate this complex system in the coming years?
Thank you, Professor. First of all, thank you so much for having me on the stage here. And one thing that I'm very happy to see is we always say the climate challenge, right, a sustainability challenge, is something that no single company, organization, government can solve on their own, right? So it's very good to see the mix of people here on the stage, right, in the audience, right, with government, NGO, right, finance, right, academias, and also on the corporate side. We need to really work hand in hand together, right, to really solve this bigger challenge, right, biggest challenge for our humankind. And then one point I would like to start is that while we have been talking about all these challenges and all this maybe slowdown in climate sustainability related investment, but I would like to start by acknowledging actually we have been making overall, right, globally, quite a lot of progress over the past 10, 15 years, right? And it's not like we have been not doing anything, right? But of course, it's far, far from enough, right? We were saying, right, all this SDG, we are still far from the target, right? But if, right, all these efforts, right, in the past 10 to 15 years, right, haven't been done, it's even much, much worse right now, right? I think we need to acknowledge, right, there's quite some progress made, but just far from enough, yeah? And then in terms of, say, for example, what the companies, right, are thinking about, right, many of our clients, right, either in Hong Kong, in mainland China, or globally, one thing I would say is many of them, they actually realize, right, when we start working with them, especially, we actually start working with companies on this issue, I think up to like 9 or 10 years ago here in China already. I remember the very first one was Apple, right? They really want to do something, right, globally, and okay, we are helping their suppliers here, right? How to follow their standard, right? And then, right, actually throughout all these years, right, there's a lot of work have been done, and people, right, recognize the challenge, right, that they are facing right now. But in general, many of our clients, they now more see in the grand scheme of things, right, in the longer term, in the next 20, 30 years, right? This is definitely something important, right? This is not something because of the recent, right, all these challenges that we'll mention, right? This is not fundamentally going to change the direction. And many of the clients, right, actually when we start working with them, they start to realize they were actually a bit behind. Actually, while we have been hearing, right, maybe on the news, right, always saying that, okay, all these targets are slow and all this, but actually many companies are doing many things behind the scene, but that probably haven't been acknowledged well enough. And then in terms of, say, what the companies, right, are thinking about, right, there's, I would say, maybe give you a few examples. One is, say we have been working, right, with some foreign companies, right, overseas multinationals in China. Say, for example, one of the biggest steel company, right, globally, and they make a massive investment lately in doing some green steel, right, in China, right? And then we also have, say, for example, quite a consortium of 8 to 10 different global pharmaceutical companies, right? They are here in China. They want to really support their suppliers here, right, to reach their target in carbon reduction, yeah? So there's a lot of, first, for Chinese companies, one of the quote-unquote pressure actually comes from their customers, right? Many of, like what I said about Apple, right, 9, 10 years ago, right? They already start giving this like a pressure, right? And then we are seeing that more and more, right, actually, right? Because I'm sure all of you, right, have some knowledge about like scope 1, scope 2, scope 3, right? Many companies have done a lot in scope 1 and scope 2 these days already, right? I think the next steps, right, a lot of companies, right, is really doing scope 3, and then they need the help of their suppliers, right, in order to solve that, right? So many Chinese companies, right, regionally, right, they need to really work with their customers, right, to follow that. And secondly, we also see more and more, right, many of the companies in the region here, especially when they are exporting, right, to Europe, right, especially, right now, right, the mainland Chinese economy might be softened a bit, and many of them looking at globalization, right, selling overseas, especially when they are selling to the EU, right, to Europe, right, they more and more, right, need to face all this regulatory, right, all the SBTI, right, different standards, right. So there's all this different pressure as well. And then even locally, right, there's actually a lot of work, right, being done by the government, right? Actually, right, there's all this, right? Say, for example, right, I think people, you probably have heard about all this carbon trading scheme, right, in China, right? So far have been applied more to like just the coal, electricity, right, kind of companies, right? But what have been, right, I think conservatively, right? I think some people are saying that within this year, but I would say a little bit conservatively, maybe in the next 18 to 24 months, right, that would get applied to more industries, right? Steel, aluminum, right, some of the more heavy industries, right? They will face, right, some of those target, right, as well, right? So, and then, of course, in China, right, there's all this policy coming, say, for example, dual control, right? So it's not just about the intensity of carbon emission, but also the absolute cap, right, of carbon emission, right, that you are allowed to do, right? So all this, right? But that's just the second part, right? This seems to, right, suggest, right? I want to echo a little bit what Ken was saying earlier, right? Very often, people when talking about sustainability, talking about decarbonization, yes, it's about doing good, but very often it's because they feel it's like a pressure, right? They feel it's some regulation, right? They feel it's some additional investment, right? It's some additional cost, right? So sometimes people don't want to do, right? Because, well, okay, economy is already bad, right? Why should we investing more, right? In increasing our costs. But many companies, right, actually also see this as an opportunity, right? Actually, many of our clients, right, ask us, right? First, right, even for carbon emission, right? I'm sure many of you know some of those like carbon marginal abatement cost curve, right? Actually, the early stage of your carbon reduction might actually be efficient to your costs, right? You actually save money. It's not necessarily wasting money, right? Or adding additional costs, right? But even beyond that, right? Over the next, right, 5, 10, 20, 30 years, a lot of money are going to be invested in all these areas by different governments, by different, right, investors, right, globally. Many of our clients actually, maybe, right, they think about decarbonization, right, as one part of what they should be doing, but more importantly, they are also seeing this as huge opportunities, right? All this investment being put in, what does it mean to us in terms of business opportunities, right? So you see, say, for example, I mean, obviously, right, EV is one, right? So yeah, the Chinese EV industry, right, is really huge and fast growing, right? And then even for many other traditional companies, say, for example, traditional electronics companies, they might be doing traditional, like, electronics, right, in the past. Right now, right, if with this climate sustainability, decarbonization trend, who are our future customers? Where are our future revenue source? Say, for example, right, if they identify EV early enough, right, some of the electronics companies, right, say, that means additional business opportunities to them, right? So very often, I think many Chinese companies, right, or many corporates in general, right, when thinking about this issue, they might think first is a cost, is an ESG, is a CSR kind of issue doing good, right, but it's additional cost. But more and more, they are seeing this as opportunity. What we should be evolving ourselves, right? Who are our future customers, right? So in that sense, many companies are seeing more opportunities, right? Hopefully, right, than just increasing regulation.
Okay, thank you, Ted. So I tend to not use the word ESG, okay, in my discussion, but both of the speakers actually also mentioned about the concept. So I think I need to make a bit kind of advertisement. Actually, on parallel to this conference, we have another academic conference on ESG issues hosted now and tomorrow. So if you're interested, tomorrow our conference will be also live streamed. I actually want to share a bit about one study that we conducted on this issue. Both speakers mentioned about opportunities for firms for doing good. We actually did the following very simple thing. We hired a lot of students, and then they expressed their concerns on the listed companies' ESG performance. And then when they deliver this message on those Chinese online platforms, which allows individual retail investors to communicate with management team, they express different dimensions of concern. Some are concerned more about E, some are more concerned about S, some are more concerned about G. And we find that actually most companies interpret E as opportunities, while S is more or less neutral. But S dimension is very difficult. Okay, the S dimension, most of other people would interpret as negative signal, right? So if you don't have good governance, it's already a strong indicator of that your company is not doing well. Or if you're doing well in G, actually stock markets rewards you. So if you're interested, please follow us, and tomorrow we will have this study we are going to introduce. But let me just follow up. I think all three speakers mentioned about the huge opportunities actually lying ahead of us on green investments. And EVs, solar panels, and also a lot of other related industries. But we also see that the US, European Union is criticizing China for producing too much of them, right? So Janet Yellen, when she visited China, she blamed China from have too much capacity in producing them, which is going to flooding the US, EU markets. That's why these countries are thinking about tariffs and thinking about other strategies trying to basically slow down this process, which of course from perspective of global sustainability is really bad. But how do you reconcile this challenge, right? On the one hand, we do see that globally we need a lot of them. But on the other hand, politicians seem to think otherwise. They actually want to slow down this process, which allow more and more people to adopt those cheap products. How do you see? And also related to that, if you look at stock market performance, right? In the past, I think we have some data. For example, the Standard Poor's Global Clean Energy Index has seen a dramatic decline of more than 55% since 2021. That is huge. Reduced, underperforming compared to the markets, which makes actually very difficult to invest, to think of what we should do, right? So I'm a sanhu, I'm a retail investor, in which I invested quite a bit in green energy in 2021, and I'm actually I suffered a lot in the past 3 years because of all those things. I just want to see from your perspective, how do you actually think about those industry, right? Sometimes the good news for the entire industry is not good news for firms, right? There's too much competition, it's so hard to make profit. And many firms would exit, and many firms, just like previous rounds of solar panels, many of them went bankruptcy, and there's another round. There is this influx of a lot of investment and then a mess afterwards. So what do you think about what is happening now? Yeah, anyone. So it's for everyone.
I can take a stab at both those questions. On the first point around the tariffs, potential tariffs or tariffs on EV batteries, and I'm not saying I agree with the policies that are being mooted, but China, producing EVs or solar panels or wind turbines is a scale game. The more you produce, the cheaper it is, and right now China has the cost advantage. And we saw that not just in the US, you saw that in India as well, where they had policies where they restricted the manufacturing of PV panels because they wanted to promote jobs and produce a supply chain or foster a supply chain industry, recognizing that they were going to need way more PV panels that could be produced. And if they didn't act and introduce effectively barriers to cheap imports of Chinese PV panels, that in 10 years' time, they wouldn't have an ability to produce those panels. So I'm not saying I agree with defensive policies by India or China, or Europe also has similar policies as well. It's not just a US Trump type of thing. Yeah. There is a flavor of, or a similar vein of policy logic as anti-dumping policies of the 1980s, 1990s of the WTO, right? We restrict some countries from dumping products that are relatively cheap. I'm not saying it is dumping. I'm not saying they're doing it below the marginal costs, but they are getting a competitive advantage, which means that it will mean all other producers of panels or batteries won't be able to compete, and you will only have a few battery producers in China. Again, I don't necessarily agree with that policy, but you can understand from an economic and, again, with that deglobalization trend, if I'm an elected politician in a certain country, does that make sense for me to try and foster an industry that hopefully pays off in 10 years? That's a little bit how I see some of those policies. it would be as a global good, would it be good that we just had a few firms producing a whole bunch of panels? In short term, yes, there may be some pain, but maybe longer term, that is better. And this is coming from the perspective that we have companies which were impacted by that. The second point around valuations of renewable companies or green energy companies over the last couple of years is, and there's a few economic professors here, so I think we can almost go back to economic theory on this one a little bit. If you look at valuations of renewable companies in the last 2 years, I think this is actually just more of a function of cost of equity and cost of debt. Debt, if you think about a renewable project, and we have, we've invested tens of billions of dollars in renewable platforms globally. If you think about what it takes to produce a wind or solar farm, you're 80-90% borrowing money, and you're injecting a 10 to 20% cost of equity into the business. If interest rates relative to 2001, where they're close to zero, go up 5-6%, the cost of equity, the cost of debt goes up. The returns go down, valuations go down. We've seen valuations at a whole go down. They are particularly, renewable energy stocks are particularly sensitive to the cost of equity and particularly the cost of debt. And the cost of debt has gone up over the last couple of years. I think if you actually run a valuation analysis that goes 10 years, I think what you're probably potentially likely to see, or what you would see, is multiples have actually gone up over the last 10 years. You'd see some of these renewable businesses trade at single-digit EBITDA multiples. They're more 10. You even see some of these platforms go 15 to 20 times nowadays. So I think the time horizon in which you pick to look at that analysis, and apologize on behalf of my industry for your stock portfolio, but I think it is as much of a function of the cost of equity, cost of debt. But yes, there is also a short-term impact of Trumpian type of impact and sentiment, which I think if you have to go through a longer-term horizon to hopefully see an upswing in your stock portfolio.
Thank you. So Ted, you want to add something? And also,
maybe I can add something. Obviously, I'm not an investment expert, so I'm maybe talking more about from the business angle. We do see, right, there's quite some, I would say, overcapacity, right, these days, right, or certainly, right, maybe not necessarily overcapacity, but at least, right, supply has been going much faster, right, than demand, right, especially in the past few years, right, when economy was not doing as good, right, people somewhat more conservative, slowing down on some of these investments, and then as Ken mentioned earlier, the high interest environment doesn't really help, right, many of the renewable developers, right, they have projects that they depend on, right, certain economics in the longer term, right, and then they have all this debt, right, and then so the high interest environment, right, is also quite a big challenge. But then in general, right, what I've been observing, right, in many of these players, right, some of this, right, obviously are potentially like consolidating, right. There might be a lot, right, in the market, and some of the really leading players, right, will still going to have the scale advantage, right, have the cost advantage, right, and have the market leadership. And then more and more, I see some of the players, right, becoming. It's not just a technology game, right, because traditionally, many of these players, right, they are strong in the technology side, right? So they really produce the products, right? But more and more, it's just like many of the technology companies in the past, right? They start with being technologically strong, but then more and more, the winner, right, or the winner these days, right, or many of our clients, right, asking us for help is more on the commercial side, because they are very strong in their products, right? Very strong in the technology, right? But how do I really understand the customer needs, right? How do I really serve them better, right? Some of the winners, right, we have been seeing is, right, they really look at what their customer needs and then make their product portfolio, right, more complete, right? Different type of like solutions, green solutions and all this, right? So it's not just a product, but maybe a solutions, right? So how to really address the customer's needs, right, is what I've seen in some of the leading players. And then also, right, in terms of, right, solar panel, right, certainly is something that is somewhat quite over capacity, right, or quite competitive. One potential area I've seen, right, is say for example in wind turbines, right, in the past, is a bit more, I would say, led, right? Not necessarily dominated, but led by some of the European players, right? Maybe Siemens and some of the multinational players, right? They were strong in more wind turbines. They were never quite in like solar, right? But these days, and at that time, Chinese companies in general, right, their wind turbine quality, right, product quality and stuff are not that competitive yet. Right, but now what I've seen lately is that their product quality in wind turbine actually is quite catching up, at least on par, right, with their global peers. And then we have been seeing more and more, even I think some of the European or some other infrastructure fund investors, they are working with Chinese players, right, to do wind turbine projects in emerging markets. Right, obviously they do not do it in Europe or US that much, right? Because there's all these multinational, right, European players there, right? But on this one, right, say for example, emerging markets, right? Some of this where the companies, right, have the, say for example, some of this ecosystem, some relationship, right, working really closely in a good ecosystem with investors, foreign investors, and having strength in emerging markets, right? I think this is, yeah, something that potentially could be quite interesting. Yeah.
Thank you, Ted. Dr. Ma, you want to add something?
Okay, I just want to say I'm not the energy expert, but this topic should be beyond the geopolitical issue. So renewable energy should be a good solution and a practical solution for dealing with the climate change, whether it's mitigation or adaptation. So how to reduce human footprint, especially ecological footprint, is the way to approach the sustainability of the world. Thank you.
Yeah, thank you. And I want to follow up with Ken on investments, right? So we now, like when we talk about green tech, people understand solar panels, wind turbines, EVs, batteries, and all that. But at the same time, I do see that EQT is also fostering and trying to have a lot of VCs trying to grow smaller firms, new technologies. Can you share with us a little bit about those emerging kind of solutions or technologies that you are aware of that might be kind of developing fast and better in the coming years?
Yeah. I think the forecasting of which emerging technology is going to win in the next generation of energy production is anyone's game. We have big debates. So if you think about the development pipeline of technologies, you've got coal and gas, obsolete, they're reliable, they work. You have PV panels, wind turbines, together with a battery storage solution which solves the intermittency issue. Is actually now, I don't know whether people know that in the audience, is actually cheaper to produce, say, a wind hybrid or wind solar hybrid solution with a battery is actually cheaper over a 25 years useful life economic position than a coal factory today based on prevailing coal prices. You can actually do it cheaper. The reason it's not cheaper today where you have existing coal plants is because the marginal cost, the factory's already built, but if you were to build a new coal plant today versus a renewable facility, it would actually be cheaper over that 25 years, but the marginal cost is low now, which is why it's cheap. And then you have some emerging energy sources like green ammonia, which is probably happening a bit more, which has some limited use cases, in green hydrogen. And so for those in the audience that don't know, that's using electrolyzers to effectively split water to hydrogen atoms powered by renewables, and then distributing that energy across the globe. We have, and then you probably have next generation nuclear technology, small reactors, thorium reactors, a whole bunch of other things coming up. Those technologies are maybe not that far away. Some of those being pioneered in China. I actually think so. We have big debates about should we be investing in hydrogen? Should we not be investing in hydrogen? You ask our chairman, he will be. We need to go all in hydrogen. You ask one of my colleagues, Francesco Starace, who is the former CEO of Enel, which is one of the largest renewable businesses in Europe. He's also the chairman of the Science Based Targets Initiative, and he will say, don't bother with hydrogen. He would also say, don't bother with nuclear if you don't already have the existing nuclear infrastructure. Because by the time you get the infrastructure to build a nuclear power plant, it's going to take you 25 years. It's going to be very costly. It's going to be very expensive to maintain. And if you had just spent 25 years building renewables, again, a solar or wind farm with a battery, you would have done it cheaper, and you would have actually got to your emissions target goal way before you would have had your very first nuclear power plant. So in terms of emerging technologies, we actually have the technologies we need today to, at efficient cost, deploy renewables. It's an appetite, it's a capital investment. Regulatory uncertainty, Trump uncertainty are not helpful in an investment environment to deploy more money in those. But we have those. I think that there are some next generation nuclear technologies. There are some next generation, green hydrogen, green ammonia that are coming. And sustainable aviation fuel. Actually, there's a very large sustainable aviation fuel that is going to be the next generation. Well, there are already. It's not even next generation. It's current generation. There are, even in Asia. There's one headquartered here that is one of the largest sustainable aviation fuel companies, and that will fuel our planes in 50 years' time. That's a little bit of the way inside and how we think about internally. There's no consensus.
Do you mind also share with us what's your strategy about allocating funds across continents and countries?
Yeah, sure. It depends by sector. It really depends by sector. If we stay on the sustainable investment theme, so on renewables, so when we look at markets, so we have investments all across the world, Europe, Asia, and the US. Actually, one of the best markets to deploy, we have found from a renewable perspective, is India, actually. And it is because of government policies. One of the things and I'm a little bit biased because just before Christmas, I was busy in India selling a platform we'd started from scratch last 5 years. Got a management team, gave them some, a few hundreds of billions of dollars. We just sold it for $1.5 billion US. It will make about $500 million USD of EBITDA, literally a business from scratch. But the reason why, and so I'm super biased, so for full disclosure. But the reason we're super bullish about the Indian renewable market is you can get 25-year purchase price agreements, so a fixed feed-in tariff rate, with blue chip credit counterparties, so state-based utilities, at scale. So we're building 100 megawatt, 200 megawatt type scale facilities. And if you know anything about energy, those are huge solar farms, those are huge wind farms. You don't get those opportunities anywhere else in Asia in terms of scale and price certainty at the same time. And so we're here talking about Trump and all these impacts on ESG. That doesn't matter when you have a 25-year contract for a fixed price at a fixed rate that you've already bid, and you effectively lock in the component costs today. It doesn't really matter in 4 years' time whether Trump's in power or not. Stable regulatory environment, stable prices, a known cost base, and we can just price the risk accordingly. So that's why we like India quite a lot. We also think that there's enormous amount of opportunity in Europe and the US. The only issue, and actually this is a global phenomenon, and not to get too technical about renewables, is not so much about the capital to build. There's a lot of capital to build renewables. The actual issue is grid connectivity. You can build a solar plant and you could be waiting 5 years before someone comes and connects it to the grid. And so where we are focused increasingly is where can we get decentralized renewables close to existing grid connectivity sites, or microgrids or smaller grids, so we don't have to have the 5-year delay of connecting our power plants into the grid.
Okay, thank you. I think we are running out of time. Let me try to just ask one last question. So this morning, I think when in Zhiwu session, Zhiwu says scholars should not give government suggestions. So, and of course, KY is objected that saying scholars should give suggestions based on their research. While Zhiwu emphasized we basically need to have suggestions from industry people, from consulting groups. So I would like to see what's your suggestion to the Hong Kong government, as the government wants to develop itself into a green finance center. And we do have a lot of legislators and also representatives from different government bodies today in today's conference. I would like to see if you have something very short, briefly, what do you think Hong Kong government should do in order to promote sustainability, green investments, and making Hong Kong to be a future center of green finance? Maybe Dr. Ma.
So thank you. So maybe just 2 key points. One is to build a resilient city for Hong Kong is very important from a climate change perspective, from biodiversity conservation perspective. As you know, climate change is a really threat to the globally, especially like Hong Kong. So the sea level rise is also a threat, and extreme weather. So how to deal with climate change? Really to build a resilient city for Hong Kong. So to make sure it's the environment friendly from biodiversity conservation perspective, from wetland conservation perspective, and also a climate resilient city for Hong Kong. Secondly, I think use the good advantages and talent people here and globally. So to build the green finance center or sustainable finance center is very important for Hong Kong because you have so many advantages, so many talented people here. So to develop some standards, tools, and approach to make sure the sustainable finance or green finance is globalized, and also approach to make sure so it build a sustainable world for the whole humanity. So I think this is a good opportunity for Hong Kong. Thank you.
Yeah, thank you. Maybe Ted?
Maybe to echo a bit what I mentioned earlier about corporates, right? Corporates don't want to be seen, don't want to see carbon reduction and all this as like costs, right? Or increasing like regulations and all this, right? But they want to see this as opportunities. I think for government it's somewhat similar, right? I would say, right? Obviously they still need to do their regulatory role, right? But it's less about really making the disclosure requirements higher, making green tax, right? Or making higher costs, right? I would say that is probably less interesting, but more about, say, using Hong Kong's role as a hub, right? As an international hub, what kind of a support, right, we can give to the corporates, right? Say, for example, right, whether I'm sure, right, being a carbon trading hub, right, is very important, right, say, for example, right? And also, say, for example, whether there's any opportunities, right? Say, for example, data transparency is also quite important within this area, right? Say, for example, all this carbon exposure and all this, right? So how government can facilitate, right, such data disclosure, right, making the platform, giving the support, and then also support in, say, for example, doing some blended finance in really bringing some iconic, right, big deal, right, big infrastructure, right, big climate-related ventures and business into Hong Kong, right? I think it's all about giving this support, right, making the infrastructure or data, right,
So basically try to make it more opportunities out of it rather than imposing more costs.
Regulation, yeah, exactly.
I think one idea could be, and I know the Hong Kong government is very forward-leaning on green financing, but potentially expanding the definition of supporting brown financing or grey financing. So you've got green industries and black industries and something in between. But I think if we recognise where we are in the journey, in the decarbonisation journey, and this may be slightly controversial, but backing industries which right now could benefit from financing and transitioning them to green industries and providing the capital to do that. And that's the evolution of thinking that we've had at EQT. We used to only invest in green industry. So we say if it's remotely touching things that are slightly outside of, that are perfectly clean, we won't touch them. Now we've evolved our definition of how we invest because we feel we are forward-leaning investors. We're saying, well, there's a whole universe of companies which are not yet green. We have the capital and the patience to make them green. Why don't we invest behind those but underwriting that we will transition those to green industries by the time we exit. And I think there's green financing, but maybe expanding that definition to recognize where we are in that journey could be one idea.
Okay, great. So do we have time for 1 or 2 questions from the audience? No? Okay, so the dean shakes his hand. Okay, thank you very much for joining this panel.
A big hand to all the speakers for this